So recently someone sent me a fake Instagram account of someone pretending to be me. And based on who that account's following, it seems like they're promoting this scammy Forex trading group. But worst of all, they called me a proud trader in the bio. And frankly, nothing could offend me more than that, because I think traders are the scum of the earth. And I use the word scum very deliberately here, because pond scum isn't entirely useless. It does provide some limited value to its ecosystem. Whereas the scammers who created this fake Instagram account aren't scum. They're just pure scumbags. They provide zero value. But this video isn't about those scammer scumbags. We're going to talk just about trader scum. And to kick that off, we have to draw the line between what a trader and an investor is. Because that's what I consider myself, an investor. And it really just comes down to your time horizon. Traders speculate on short-term price moves and live solely in the short term. And depending on which type of trader you are, some focus on time frame of days, whereas other ones have time frame of weeks or quarters. But all of that is really short term compared to the investor. Investors buy companies to hold and build real wealth. And understanding this difference is crucial. And by the end of this video, you'll see how traders' short-term obsession has accidentally created the biggest investing opportunity of our generation. But first, if you're trying to become a better investor, please consider giving us a like and subscribe. We release videos multiple times a week focused solely on intelligent investing. And if this is our first time meeting, hey, I'm David. I'm the founder of Flank Investing, and our mission is to bring Buffett-style investing, which we consider intelligent, into the mainstream. If you want to learn more about how we're doing that, there'll be a link to our site in the description below. You'll also see a link to a free Discord where we have people talking all day about investing. I really hope to see you there. And I'll also post a link to my real Instagram account so you don't fall for that fake scammy one. All right, so why do I think traders are scum? And that's because scum, which is the layer of algae that forms in stagnant water, like ponds, actually serves an important role in its ecosystem. A little bit of scum helps. It aids in nutrient cycling as it helps decompose organic material, and a lot more. But too much scum makes the pond stinky and ruins the beauty of the pond, and can become detrimental to the pond ecosystem at large. And of course, I'm using this as a metaphor for the market. A little bit of trading scum is good for our market ecosystem. It allows for two really important things to happen in our market. And the first of which is liquidity. Because trading volume is so high, it means that there's almost always someone available to buy or sell a stock, which allows us as investors to easily enter or exit positions without dramatically affecting the price. And second, traders improve market efficiency. Efficiency in the stock market just means that the stock prices quickly reflect any and all available information. Some academics argue that the market is perfectly efficient, though I and Warren Buffett would argue that the market isn't perfectly efficient. It's mostly efficient. Benjamin Graham puts it best when he said, in the short run, the market is a voting machine, and in the long run, it's a weighing machine. But here's the thing. In our current market ecosystem, traders are becoming the majority, not the minority. This graphic shows that the average holding period has gone down drastically in the past decades. In the 1950s, the average holding period for a stock was 8 years. And by 2020, that had decreased to 5.5 months on average. So as it stands today, the market is mostly traders. And this is actually exciting to me because this gives us opportunity. The real opportunity in the market presents itself when you zig when the rest of the market is zagging. But let's stay on this point for a second. Let's go into the huge downsides of this trend. Remember, traders are almost focused solely on the short term, and a market ran by those traders forces us into short-term thinking. Forget the next 5 years or decade. They're obsessed with the next quarter. And so in a trader-dominated market, we essentially have a market that is running on ADHD. And this ADHD market has some serious downstream effects. And this stems from the fact that most CEOs are compensated based on their company's stock performance. And since the market is favoring short-term results, that means that the stakes are often being played out quarter by quarter, forcing businesses to think in the short term. And this obsession with short-term results isn't harmless. It influences almost every aspect of our life, even if you're not an investor. For instance, it encourages mass layoffs to keep quarterly earnings per share high during tough times. And since the future is so hard to predict, especially if you're just trading, it encourages traders to use margin and derivatives to juice any small edge they can find. And so when these things blow up, as we saw in 2008, the outcome can be catastrophic. All this byproduct results in what I believe to be the biggest downside of all. Because the market is focused so intensely on the short term, new and innovative companies are staying private longer, which removes our ability to really enjoy the upside as investors. A great example of this is SpaceX, which is owned by Elon Musk. He said that SpaceX will remain private until they have a sure line of sight to establishing a space colony on Mars. He thinks that if SpaceX went public before they were ready to go to Mars, that the short-termism would ruin their mission. Meanwhile, as the company has stayed private, rich private market investors have been able to enjoy incredible growth of the SpaceX business, from them building out their Starlink network to their extremely profitable space hauling business. By the time they are ready to go public, most of the value will have already been taken out of the company. This really hurts us as investors. So thanks, traders. This is why we can't have nice things. And I really hope we can get this sentiment out of the markets. And the biggest kick in the pants is that most traders don't actually outperform the market. Hedge funds are the giga-chads of traders. And even hedge funds can't beat the market just by trading. In fact, this study from Vanderbilt shows that since 2008, hedge funds have drastically underperformed the broad market. And then when you stack their fees on top of this, which is how most hedge fund managers get rich, the results are even worse. That sounds like too much scum in the pond to me. And it's because hedge funds and some financial advisors are better at selling themselves to you and making money from you rather than for you. Contrast this to Buffett. Berkshire Hathaway stock could drop by 99% and it still would have outperformed the market. That is absolutely insane. And you don't have to be Warren Buffett to do this. Take Ronald Read. This guy was a janitor who amassed a fortune of almost $8 million by being an intelligent investor and not a trader. He invested solely in companies that he understood. So what should you do? Well, I hope this is obvious, but you shouldn't trade. The evidence clearly shows that most people would be financially healthier just investing constantly. We at Flank recommend that you always dollar cost average in the S&P 500 to protect your nest egg. And if you're interested in learning how to stock pick and pick stocks just like Warren Buffett, there's a ton of free material on the internet. And of course, there's Flank, which we're building entirely around this idea. But I'm not going to go into a sales pitch on Flank because you didn't click this video for that. But really, you can learn how to do this with all the free material that's on the internet. But the biggest thing you have to look out for in your journey as an investor is to ignore the siren's call of trading. And that siren call is getting stronger and stronger. Remember, Robinhood makes most of its money by selling you options premiums and crypto. And they have plans to break even more into this gambling market. They know that there is way more money to be made off of people who are trading and gambling. And just like Charlie Munger said, show me the incentive and I'll show you the outcome. This is the direction Robinhood's going. They are creating a trading and a gambling app masquerading as an investing app. Honestly, I bet the other brokerages are going to be following in due time. So our platforms are encouraging trading behavior. What can we do to fight this? Unfortunately, on a systemic level, I don't think that there's much we can do without legislation. But I do have a solution there. Congress should make short-term capital gains taxes significantly higher than they are, like 50 to 60%. The value that traders bring to the market is undeniable. Liquidity is important to the market, but these market makers and traders shouldn't be able to make money hand over fist on it. So the key thing to remember in this video is as the markets get more and more short-term based, this creates a huge opportunity for us to do the opposite. And I know this because it's working for me. I've comfortably beat the market by a significant margin for the past 10 years. And that's made me hundreds of thousands of dollars in the market. And one day it'll be millions of dollars. So in a market dominated by traders, the best thing you can do is be an investor. Warren Buffett says that it's better to think of our investments like farms. As long as we understand the business and what it produces, we know what the value of that company is. That's the core of Buffett-style investing. Know what you own and why you own it. That's all for this video. Thanks so much for watching. And remember to check out Flank Investing or our Discord if you're interested. And if you're the person running that scammer account, stop it. Bad. Knock it off. Instead of trying to scam people with Forex groups, become an investor with me. And I'm serious, if you introduce yourself, I know you watch these videos because you post them, come talk to me and maybe we can use your powers for good. We'll see you in the next one.